to the Floor Show and Mahoney Asset Management CEO Ken Mahoney, who was overweight Nvidia, but today has just downshifted to equal weight. Ken, what drove your decision to lighten up here on Nvidia?
Well, we've been riding this great wave, Liz, from 2024 and 2025. We have these great gains, and the valuation it does get kind of troublesome. But you know what? I think next year should be companies like Walmart, and I'll give you a couple others, where they've made the investment already, right? They put all this money in AI, and because of that, they're gonna be more profitable. So, we hung out Mag 7 like so many managers did for the last couple of years, and it worked pretty well. But look, the market's spreading out, right? We heard about pharmaceuticals and the recent one, and you're gonna find other sectors, not just tech. And I also want to say this, Liz, you have a great memory of stuff like this. Do you remember the cover of Barron's that showed a scale, JDS Uniphase on one side, and like 10 household names on the other side?
Yeah.
You do, right?
Yeah,
So
I
that's
do.
kind of, if this is a 2025 Barron's cover, it could be Nvidia on one side and like 30 different US companies you're gonna have for the same 4.3 trillion valuation.
Well, what I think is really interesting when it comes to your specific perspective is that you said that late October, early November, a whole bunch of things started to line up. Namely, the mega caps kept pushing the indexes higher. You said there was very poor breadth, high beta, meaning high volatility, high action here. It just felt like something had to happen. It was interesting that that was the headline, this Google chip threat that came out, one report from the information, and the whole sector seemed to spasm and now coming back.
Right. I think the setup for this rally we've had in the last few days is a perfect storm, like the movie, the winds and the high tides and stuff like that. What was it? Well, it was the Fed uncertainty. Will they? Won't they? Trump, of course, with tariffs, 40%, 0, 100%, a moving target. The carry trade with Japan, AI valuations. I mean, we had it all. But on Friday, it changed when Williams, the Fed governor, who's most around consensus, said, you know what, we should really get a cut at December 9th, December 10th meeting. And that turned everything around. The volatility index was sitting around 25, 26. We use our VIX a lot in our models, Liz. And now here it sits at 17, 18. So really the pivot was, I believe, was Williams' speech propelled us Friday and so far Monday, Tuesday, Wednesday, and be very thankful for Williams now looking at consensus, 85% chance they will cut rates.
Yeah, that Fed meeting, December 9th and 10th, the decision will come down on the 10th. You got to just look at the Fed funds futures. I mean, last week they were pricing in something like a 40, 50% odds of a rate cut, and now 85% odds that there will be a 25 basis point cut. So would that be the next catalyst that really propels this market?
I think so. And I think we still have a lot of negativity out there. I think we have a lot of hedge funds that are offsides in the shorts. We see a Santa Claus rally. I mean, coming down the chimney, filling our stockings, all that stuff. But we really do see that. Again, look, we had a great move this week. We may have to go back and fill. Nothing goes up in a straight line. But the bugaboo, as far as the Federal Reserve, will be decisive on December 10th, as you mentioned. 2 p.m. right on the nose. And then after that, I think it's just kind of, managers looking at the books and trying to, show the top 10 holdings going to have Google. But I do see this could be a good setup for a year-end rally.
And Dell comes out with a much higher current quarter revenue and profit expectation. That's got Dell streaking higher. And so it's those kinds of things that get people understanding that not only is there a lot of activity, it's not just fluff. There's actual revenue, there's actual profit that is being made here. Dell's up 6.8% at the moment. On the other hand, you've got HP, which announced, I think, like 6,000 layoffs. Horrible timing, HP. Don't do that right now. I guess there's never a good time, but
not cool.
The day before Thanksgiving.
No, this is not a good time in the holidays. No, not a good time.
Definitely not. But the economy, durable goods, I do just want to say this, Ken, they look strong, which does put into a little bit of a question about further rate cuts in 2026. I want everybody to look to the lower left. Core capital goods far outpaced the estimate of 0.2%. They came in at 0.9%. Folks, that is a proxy for business spending. Really quick, Ken, what does that tell you?
Businesses are alive and well, and also tells me that you can't count out this. And by the way, be careful what you wish for. I don't want to see a whole bunch of rate cuts in 2026 because that means the economy is slowing down, really. So let's be smart here. We don't want a whole bunch of rate cuts if it means the economy is slowing down.
and rate cuts are stimulative. We want to keep inflation in check,
Right,
not make
right.
money so
The balancing
incredibly
act.
cheap that people borrow and start buying, and then we get the supply-demand discombobulation. Ken, happy holidays. Thank you so much for
You
joining
too.
us.
Happy Thanksgiving to you and your